Welcome from Paris, where I've just been poring over well, it's pouring with rain as well, but I've just been poring over the latest Google quarterly results. So I just want to pull a couple of things out. From all the coverage that you're seeing pretty much everywhere, it was a really good quarter for Google. Google search and other revenue was up nearly 6%. YouTube up 6.5%. That's really where they're focused. That's where they're trying to grow. Google advertising overall up 5.5%. Total revenue up to 96 billion for the quarter, which is more than $1 billion a day. And that's up nearly 7%. But the piece that I always focus on when I'm analyzing these reports is what's happening in the Google network sector, that segment. That's really where Google is sharing its advertising monopoly, which isn't officially a monopoly now, its advertising monopoly money with the open web and supporting all the publishers within its network. Now, it rose for a couple of years, but for the last 3 years, it's declined consistently. And we've seen the same thing again now. So we saw a big decline last quarter. We've seen a slight increase this quarter, but for the year, it's actually stuck on zero. So it's showing no growth at all after 2 years of shrinkage. This basically means that the amount of money that Google's choosing to share from all the advertising that it controls with the rest of the open web is declining. It's considerably declining. And the amount of money that it's banking for itself through its owned and operated businesses is growing consistently. And so what you can see is that Google is stockpiling cash into its own businesses while it's waiting for a decision on the antitrust breakup. Now, I spent yesterday, a very enjoyable day yesterday with Agence France Presse, and the main topic of conversation there was, what do we think is going to happen in the Google breakup, which is now literally just a couple of weeks away, okay? And so it might even happen in the next fortnight. So we need to be ready for this chaos to suddenly ensue. Now, what's interesting is that Google is clearly trying to protect itself by putting money into its owned and operated businesses, which is a sensible financial thing to do. But obviously that's having an impact on the rest of the open web, which is bad. Now, what's going to happen next is that we're going to find out, as I said, in about 2 or 3 weeks, maybe a bit more, how the business is going to be broken up. But what we saw was that Google reported these great results, okay? It's a very bustling Paris if you can hear all the traffic behind. When Google's reporting these stellar results, really strong results for the quarter, the stock market didn't react at all. The stock market actually saw their stocks stay pretty flat. And so really the entire market is waiting to see what happens in the Google breakup. What I thought was really interesting, though, was some coverage in the New York Times today. And so very careful publisher, but the way they've described it is that it says, uncertainty over whether Google would continue to enjoy robust revenue and profits became widespread earlier this year. Well, no surprise, that's because it just lost its third antitrust case in a row. And it says, at one point, the company's shares were down 25%. Now, that's exactly right, and I've been reporting on that. Now, it has been doing slightly better, but the New York Times is exactly right to call out what it says next, because the numbers show this to be true. It says, quote, one big concern was search, which provides more than half of Google's revenue and 3/4 of its profits. As simple searches begin to lose ground to AI queries, Google's long reign as the place to go for answers online is suddenly imperiled, and so are the advertising dollars that flow out of search. Now, again, if you look through the financials, you'll see very clearly that search revenue is by far and away Google's cash cow, right? It then says, and this is the piece that I think you should read from the New York Times, the important piece. It says, Google has immense strengths, very deep pockets, and universal brand awareness. It can afford to hire all the AI stars it needs. Still, the history of tech is full of one-time powerhouses like the mobile device maker BlackBerry and the social media site MySpace that failed to anticipate the future, and Google is not exempt. So, Google's share of the search market is below 90% for the first time in a decade. And I'll tell you one other thing that's really interesting is that yesterday, Google also decided to change its logo. It's from the G, you remember the G? It's now got a slightly different, funkier version. Here's the interesting thing though. If you go and research all the other companies that at the same time that have been in the same position as Google, they've all changed their logos as well. And the list is long. Meta, after Cambridge Analytica, changed its logo. You've got Xerox changed its logo. BlackBerry changed its logo. Nokia changed its logo. All of them changed their logos, with the exception of Meta, just before they went into fairly serious decline. Let's wait and see what happens. We're just a couple of weeks away from the breakup.